Good evening, dear traders. Today, the key event for US dollar against Japanese yen is the Federal Reserve interest rate decision, followed by the press conference of the new Fed chair, Kevin Warsh. Warsh currently finds himself in a rather challenging position. On one hand, the Trump administration has long advocated lower interest rates to support economic growth and reduce borrowing costs. On the other hand, inflation remains noticeably above comfortable levels following the surge in oil prices caused by the recent escalation in the Middle East. However, the situation has begun to shift over the past few days. Following reports of a memorandum of understanding between the United States and Iran, as well as announcement regarding the immediate reopening of the Strait of Hormuz, the oil market experienced a sharp correction. Oil prices have fallen roughly 10% over the past week. So here it is, oil. We can see this movement and break 88 level. So, and this significantly eased inflation concerns and potentially gave and can give the Federal Reserve room for a more dovish tone. This is why today's focus is not so much on the interest rate itself, but on the language used by the central bank. Any hints that the Fed may become more accommodative in the future could weaken the US dollar and trigger profit-taking in long dollar positions. This is particularly important for US dollar against Japanese yen because the pair has once again approached the 160 area, a zone that markets traditionally viewed as a region of elevated intervention risk from Japanese authorities. We have already seen several occasions where approaches to the 160 level resulted in strong reactions from Japan's Ministry of Finance and the Bank of Japan. An excessively weak yen increases imported inflation, raises energy costs, and creates additional pressure on Japanese consumers and business. From a technical perspective, the uptrend is in US dollar against Japanese yen remains intact. Buyers continue to maintain control and the overall market structure remains bullish. However, the closer price gets to 160, the greater the risk of profit taking and a deeper corrective move. As a result, the market currently stands between two competing forces: strong US economic data and a significant interest rate advantage in favor of the dollar. Expectations of a potentially softer Fed tone and the ongoing risk of Japanese currency intervention. So the market reaction to today's press conference may determine whether 160 becomes another turning point for US dollar against Japanese yen, or whether buyers can finally establish a sustained move about this psychologically and politically important level. But you need to know that this level is very risky.